Good morning, it's Jonathan Barrett with a combined war report and also market update. Obviously there's been quite a lot of news this morning, particularly with what's happening in Libya. It appears that Colonel Gaddafi, or the demise, certainly there, his son has been taken under house arrest, and it looks like the rebels are certainly having their way at the moment. It looks like Tripoli has fallen, and with that we're obviously going to see some consequences developing in the market. So what we thought we'd do is we combined the week ahead report together with the market update. Just looking at crude at the moment, crude is trading at 81.98. That is down a little bit, down 0.32%. Looks like we haven't seen too much of a reaction so far with the oil price, but I think that will come as the world wakes up to the news. Just so by way of a bit of background, Libya produces 1.4 million barrels of crude, light sweet, and so far they're only producing about 360,000. So when you look at that, you're expecting 1 million barrels to come on tap. Now the story is that the rebels have certainly been in talk with a lot of the refiner owners or operators, the likes of Shell, BP, etc. And looks like a lot of these refiners aren't that damaged, so their capacity to be able to come up to what we've suggested, up to that 1.4 is quite real, and could come in quite a considerably short amount of time. As we said, the damage hasn't been too much to them, and I think Libya understands that this is a good form of currency, and they need it. They've got some humanitarian issues as well, so they need supplies, and I think this is one quick way of getting it. In addition to that, you'll probably find also with Brent, that spread between Brent and West Texas has blown out to a record of 25. But given I guess a bit of alleviation in pressure from what's happening in Libya, you could probably expect to see that spread actually come in. If that spread comes in, then you'll probably see it come back to 20, maybe even $15 a barrel. So if anything there, I'd like to see that come in. So let's have a look. That's a Brent sweet and also West Texas. That spread should come in. Obviously we know Brent is a heavier crude, and people will sort the light sweet. So as a result of that, I'll probably expect that light sweet to come in, that light sweet. So it'll be a buy. It'll be basically a buy West Texas, sell Brent, and as a result of that, we should see that spread come in. In fact, it's already behaving that way. So far, light sweet, the West Texas NYMEX is down 0.32%. The Brent contract is down 1.49%. So that will probably continue. That trend will probably continue. Okay, so that's got to do with that. Let's look at some of the other markets whilst that's under pressure. We've obviously seen with gold. Gold's had a terrific move to the top side. There it is now, very volatile, 1874. We had a high of 1882. Now that's a phenomenal move. Why has that occurred? It looks like we've seen a breakdown in Basel III, and that to me is a bit of a worry. The accord basically put together by 27 member states into banking safety and regulation was an accord that was put together to safeguard any form of a freeze in financial markets, which was similar to what happened when Lehman's collapsed in September 2008. Now, I guess if there's a meltdown that occurs with this agreement, then people are going to question the safety or security of those member states. And as it appears and what we're hearing is that Europe, the EU, have decided to water down the agreement and change a few of the definitions. And I think the main reason we feel for that is that they can't afford it. Now, if they were to implement Basel III, then they'll need an additional $600 billion. Well, that's what we actually suspect. So that additional $600 billion, we know they probably don't have. As a result of that, you could see that accord actually go into a bit of a tailspin, and we get a little bit more uncertainty. That uncertainty has obviously been translated into what's happened to the gold price, because the gold price, as we know, is exceptionally big at the moment. Taking out 1880, you'll probably find 1920 and 2000 just around the corner, because I think this is a bit of a major event as to what we are seeing. Okay, so that's pretty much why gold's up there. Looking around the market, how has the Libyan situation affected the equities? Just quickly having a look, the Dow's down 52 points, 10,767, that's on the mini. Our local market's actually holding up okay, which is quite good. The local market is only down 5 points. That's our local market, that's the Dow. You can see the Dow there, expectations are for it to test down to that lower end of the range. And I think equity prices on that will remain weak. I guess in my mind the key towards the equity markets is that they will remain. We might get a little bit of a good feel rally as opposed to what's happening in Libya. That certainly might help things along, but at the moment everything still looks relatively weak. There we have the local market down 5 points, 4,063. Expectations are that that can continue to be weak as well, and there we are, expectation to break through or even test down through that 4,000 area, I think is certainly well and truly on the cards. So let's see, equity markets still remain a little bit under pressure. We've talked about gold, we've talked about crude, silver, probably a little bit of catch up in silver for expectations for that to continue to trade higher. The little Aussie battler, 104.01, very steady. The US dollar throughout this whole trauma has been very steady, 74.20, probably worthwhile having a quick look at that. Just looking at the chart, and you can see that very stable indeed. Expectations in my mind are for that US dollar to firm over time. Okay, as it is the war report, let's have a look at the economic numbers coming out this week. I guess the most important ones will come out on Wednesday, but if we run through the numbers, not too much on Monday. We've got nothing too major there. Tuesday, I guess not a lot, but there's EDW out of Germany will be very important. New home sales in the States will be widely watched. Wednesday, this is the big, we've got Germany, IFO, business climate, expectations, etc. Durable goods in the States, capital goods and house prices, all really important there. Coming into Thursday, initial jobless claims, and that people will be monitoring that just to see what's happening. Remember, we did get some relatively positive data last week. And leading into Friday there, GDP annualised, the market's not expecting a good number, 1.2%. Remember, there is that prospect of the US into a double dip. Also have personal consumption and the University of Michigan confidence numbers. Well, that's pretty much it about the report. That's the war report and also the market update on crude. Happy trading. Let's see how it all works, and we'll talk to you later. Bye for now.